So again, good evening, everyone. Thank you for joining us for tonight's program. My name is Alex Brown, and I serve as the Director of Education and Leadership Programs. A few quick reminders as we begin tonight's program. We definitely encourage you to have cameras on for the program, and feel free to update your name in the Zoom to represent who you are and if you're representing a chapter or colony tonight. Tonight's program is also meant to be interactive. So if you have questions that come out during the program, you can use the raise hand feature on your toolbar. You can also enter questions in the chat. I'll be monitoring that throughout the evening, and we definitely encourage you to ask questions throughout the program. We're very excited to welcome you to our Financial Foundations webinar. Tonight's guest presenter is David Edwards, a member and graduate of our Georgia Southern chapter. Brother Edwards serves as the Director of Strategic Projects at United Bank, and he has over 35 years of experience in the banking and finance industry, including as a co-founder and Chief Credit Officer of Community and Southern Bank. He's earned his BBA in accounting from Georgia Southern University and remains very active in the school community, serving as a trustee board member for the Georgia Southern University Foundation, as well as the Parker College of Business. He also serves as a board member for the Delta Chi Fraternity Housing Corporation at Georgia Tech and the Delta Chi Fraternity Educational Foundation. He is the current Finance and Investment Committee Chair and a Treasurer for the University of West Georgia Foundation, and serves as a board member for the Atlanta Youth Academy. David is passionate about equipping youth and young adults to succeed in all their endeavors. David and his wife, Catherine, live in Carrollton, Georgia, where they are active in the Mount Pleasant Baptist Church. They enjoy spending time with their 4 adult children and family, along with their eight grandchildren. And in his free time, I don't know how he has any with all the things that he is doing and volunteering with, but David enjoys road cycling. So please join me in welcoming Brother David Edwards. David, I'll turn it over to you.
Thank you, Alex. Can you hear me all right? Good, thank you. Well, I am happy this is being recorded. Hopefully you can share this with others. And thanks to you guys who have joined us for the recording. If you're having any technical difficulties and you'd like us to pause, I would ask you to hold your hand up and tell us that now, and we'll see if we can fix it up for you. Otherwise, we'll get started whenever you are ready, Alex. Thumbs up. Here we go.
You're good to go.
Well, so this is Financial Foundations is the name of the topic that's put on your invitation, and there are 2 specific topics that that I believe are necessary to establish a good financial foundation, and one of them is personal budgeting, right? And you know, without personal budgeting, you'll never be able to save any money. You'll never be able to invest any money. So the personal budget is actually the cornerstone, the foundation, if you will, of good personal financial management. So you got to start here unless you're just independently wealthy. And so if you're independently wealthy, you probably don't need to be listening to this. You probably still do, but it won't hit you till way down the road. But if you're not, and you have a job and you have a budget to concern yourselves with, then you need to be listening to this webinar, this seminar. None of this is really difficult, and you guys are all college graduates or on your way there. So none of it's going to be really difficult for you, but what is difficult is the discipline to do it. Okay, so it's not that the thing is difficult, it's your desire to do it is difficult. And so I want you to pay attention to what we talk about and understand some of these concepts. And knowing your numbers matter. You know, a lot of times maybe you're not a finance major, you're not an accounting major, you're not a business major. It doesn't matter. You can be a history major, biology major, whatever. Your numbers always matter in your budget. And so it's all up to us when we graduate and we're out on our own. We have jobs, we have families, we have responsibilities to think long term, and we have responsibilities to think short term. You might hear me say, you know, the word savings, and you might hear me say the word investing. Savings, when I refer to savings, that's short money. That gets us through an emergency. That pays for a vacation. That does something temporary. When I say investing, that's long money. And so I might talk about both of those. And if I do, that's what I mean by each of those terms. So we'll jump right in. And tonight's session, we have 1 hour, and we'll see how it goes. But we're going to start with talking about a personal budget. So I'm going to share my screen. See here. Get to see some nice trees there, I hope. That's what you're seeing. It's not my backyard, but it's nice. Okay, So I'm going to walk through a live example of a personal budget. Okay. So I'll blow my screen back up here in a minute, but I want to show you, this is not a big deal. It's 2 pages worth of planning for you personally. And so if you can see my screen, this is page 1. We're going to talk about your income. We're going to talk about your expenses. We're going to break those down on a monthly basis and what it means to you annually. And then on the second page, we're going to talk a little bit more about expenses and also some rent payments and debt payments and so on. Okay, very easy actually. And what I mentioned earlier, none of this is hard. It just requires discipline. And that's one of your key takeaways tonight. So we're going to start here with income. So everyone on this line, if you, I'd see a couple of older guys, but for the most part, this is for undergraduates, and you're going to graduate and you're going to be seeking a job, and you'll find one, and it'll be your first job, and you'll learn a lot about a lot of things. You'll learn about income taxes. You'll learn about 401ks. You'll learn about, paying your own bills and things like that. And so this tool, which I'll provide to Alex and you can distribute, is extremely valuable. And it's so simple. It's stupidly valuable. It's so simple. So I'm going to go through an example of a college grad. So we'll call this recent college graduate. And feel free to interact with me. Otherwise, I'm going to just roll down the page with an example that's pretty true, actually. So I have 4 kids, and all 4 of them are college graduates, and all 4 of them have used this tool, and all 4 of them have had sort of wow moments or epiphanies, thinking, "Wow, does it really cost that much?" And yeah, it does. Cable bills cost you, cell phones cost you, concerts cost you, all these things cost you, and you have to fit it into your budget, right? So I'm going to start with the assumption that you graduate, you get your first job, and it's a $40,000 per annum job, right? Okay, it's just you. You graduate, you're hanging out with your buddies still, but you're making $40,000 a year and feeling pretty good about it. All right, so that's $40,000 per annum. What does that mean per month? That's $3,333 a month. Seems like a good bit of money, and I would agree it is. Well, that's all the income, right? So again, unless you have other sources of income, which you can dial in here, not a problem. But we're going to go with the baseline assumption that you're a college grad making $40,000. Anybody have any problem with that they'd like to shout out? Okay. All right. So, of course, when you start making money, the federal government has its hand out, and the federal government is a pretty hard taskmaster. They're going to ask you to pay them a pretty sizable portion of what you make. All right. Now, I'm not going to get into tax law, but I will tell you that if you make $40,000 and you have take-home pay of, $40,000, you have taxable income of somewhere around 20, it's probably $28,000, give or take. So you're going to be taxed at roughly 11.5% on that money, federal tax. All right. So you're going to pay $3,174 per year in taxes, give or take. And if you live in a state that has state income tax, which if you live in Georgia, so I'm in Georgia, we're going to use the Georgia example. I know the Georgia state income tax is 5% per year on your taxable earnings too. And so we're going to use 5%. So you're going to pay straight away 20% of what you make to the government for taxes. All right. So you may not like it, but that's the way it works. I'll tell you, Social Security is also a tax. It's 6.2% of what you make. There are some thresholds, but again, we're not getting into tax law. And Medicare tax, you're going to pay that tax too. And by the way, if you hadn't figured it out, you're going to pay sales tax, and you're going to pay property tax, and you're going to pay hotel tax, and you're going to pay a lot more tax. So I don't know who you might be on the line, but if you care to study all the taxes that one pays as a citizen of the U.S. or a particular state, I think it'd be a pretty interesting study for you. So anyway, you can see that for the year, you're going to end up paying something around $8,200 in tax. So you made $40,000, or you made $3,333 a month, and you're going to pay somewhere around $8,000 of that out to some governmental entity, either the federal government or the state government. So I'll pause there for just a moment, just to see if there's any questions and sort of let the framework set in right there. Okay. All right. So income taxes have to be paid. So I put that first because you don't have a choice. If you fail to pay those, then you'll be in jail and you won't be able to work. All right. So you must pay the income taxes, and then you have the rest of the money available to yourself. Right. So that $8,200 works out to be about $686 a month in taxes. All right. So you made $3,333, paid $686 in taxes. That leaves you something like $2,700 or something to live with. Now, again, I want to say out loud, I'm not going to tell you any revelation here. This is simple stuff, but the key to all of this is being disciplined enough to do it. Okay. And what I mean by do it is actually take the time to work on a personal budget for yourself. Your budget's going to be different than the guy next to you, than the girl next to him, than mine, than Alex's, than Sean Conrad, who I see online. Nobody's budget is the same. It's all a personal budget for you because your income and your expenses are yours, right? So the next item after you pay your taxes, I believe, should be, what do you pay yourself? Okay. And so this is where, remember at the front end of this webinar, I said that there are investments and there are savings. Savings are dollars that you set aside for temporary items. And I've mentioned down here, vacations, emergency monies, things like that. Maybe you want to buy Christmas. Okay. Maybe you want to buy your girlfriend, a ring. And so you would save for that. You don't invest for that. You save for that, right? You invest long-term to retire. And hopefully you'll work at a company that will offer you a retirement savings plan, some form of one. 403B if you're in a public entity, 401k if you're in a private industry, but some kind of plan where you can put money aside and save long-term for your retirement. So, most of you guys are going to be 21, 22 years old or something like that when you graduate. And so for the next 40 years, if you invest, right, you'll be surprised at what you will have in your investment account when you retire if you invest early. And I hope we might get to some of that. Hopefully we will. If we don't get to the investment component of this webinar, we'll do it on another one, Alex. So the employer retirement plan. I suggest, now most of you are going to be offered an employer retirement plan when you are there, say 90 days, 6 months, some time frame. I suggest that you take full advantage of your employer's retirement plan. And most employer retirement plans say something like, if you put in 5% of your pay, we'll put in half of that again for you. So let's see what that means. So let's put in 5% of your pay. So you're going to put in $2,000 a year into an employer retirement plan. Well, most employers, not all, some are even more generous than this. Some employers say, if you put in $2,000, we'll put in $2,000. That's fantastic. So look for that when you're looking for a job. Don't just look at the pay, look at the benefits that come along with it. But let's go with the assumption that you put in $2,000 and they match 50%, meaning that they'll put in $1,000. Well, if I gave you if you gave me $2,000 and I gave you back $3,000, who in the world would not do that, right? So I suggest to you that you explore that immediately upon being hired by a company after you get your first job. Okay, so 5% is $2,000 a year. It works out to be $167 a month. Now you might have some other investments, and I've made a line or two here for you to do that, but we're not going to go through that tonight. I just want you to show you the employer retirement. Now savings and emergency funds are another item. So you want to have savings to cover things that you don't expect to happen. So maybe you say something like, what I'd really like to have is 6 months of my gross pay, in savings. So your gross pay is $40,000. And so 6 months of that's obviously $20,000. And now you can't save that in a year, but you could make yourself a goal to maybe save that over 5 years and say, I'd like to have $20,000 in a savings account, in a money market account, in a cash account of some kind that I can get to if I need to for an emergency. And that might make you feel better as a good personal financial manager, right? And so let's say you chose to strive to have $20,000 over the course of 5 years, and so you need to put in $333 a month into that account to get to $20,000 in 5 years. Okay, that's a lot of money, and maybe you say, "Gosh, I can't really do that. That's too much money." Well, maybe you could put in $200 a month, and that'd be $2,400 a year, and in 5 years you would have $12,000. Okay, you get my point, right? You do need some money set aside for savings for those things you don't expect. And by the way, the things you don't expect, you don't know what they are because you can't expect them. And so it could be your engine blows in your car and costs you $3,500. Could be that. It could be you have an emergency situation with a medical bill or something that's not covered by insurance. Could be that. But whatever it is, I suggest that you invest through an employer retirement plan and you save for you. So all of these monies belong to you. All of these monies belong to the government. They've taken them from you. But now it's your turn to put money aside for yourself. All right? So you do that. Next is charitable donations. So you put money aside for yourself. Now, my suggestion is you think about others. There are a lot of others out there that have helped you along the way. We fraternity men need to be charitable. And an easy way to be charitable is to be a member of the, Alex, it's the 1890 Society, right? 1890, right? So 1890 Society, okay? And it's only $18.90 a year. Alex, correct me if I'm wrong. So you only have to put in $2 a month, right? You have to forego a half a cup of Starbucks coffee to be a member of the 1890 Society. But you become a member, and it's a charitable donation in that way. You also have churches, synagogues, other things. You might have heard Alex read my bio, and there are a number of charitable donations that are important to me. Some are universities, some are schools, K through 8 schools, some are churches, other things like that are important. But I encourage you to think of others through charitable donations. Okay. All right. So let's recap where we are. We made some money. We made $40,000 a year. We started spending money, but first we had to pay the government, and then we had to pay ourselves, and then we had to think of others. And then lastly, it's time to pay our own bills. So home expenses, house cleaning. Normally, when I talk to this group, they say, no, we don't pay we don't pay for house cleaning. Okay. We do it ourselves. All right, fine. Do it yourself. But if you pay for it, put it on this page. But you do pay for utilities, electricity, water, gas, those sort of things. And if anybody has a number that they'd like to use, shout it out. Maybe you've got a good number that feels right to you, but I'll tell you it's probably somewhere around $125 a month, all in, with water, gas, and electricity, something like that. Real estate taxes. You don't have real estate taxes unless you actually own a home. But if you own a home and it's not included in the mortgage payment, which oftentimes it is, then you have to account for it here, right? So if your mortgage, usually if you have a mortgage, your mortgage company is going to take their payment, but they're also going to take a small payment every month for taxes and for hazard insurance, property damage insurance, and they're going to accumulate those monies. And when your tax payments due, they're going to pay it, and when your insurance payments due, they're going to pay that. So normally it's included there, but if it's not, it's a good place to include it right here. So lawn maintenance and garden supplies. I'm going to make the assumption in this example that the person here at the top of the list, the recent college graduate, is going to be a renter, right? You're going to rent a house, you're going to rent an apartment, and that you're not going to have lawn maintenance and garden supplies. Fair enough? If you would like me to, I can include it, but my example would say, let's just not do that. Now, when you do have a house, you do then have lawn maintenance and you do have garden supplies, unless you pay somebody. In that case, you'd put that amount in there. But whatever it is, it is. Home repairs and maintenance, you're not going to have that if you're a renter. Cable and internet, though, you will have. Any ideas on how much cable or internet costs one now? Go with $75 a month. All right. Home security, probably not going to have that, but you might if you own. You would probably if you own a house, but you might have it in an apartment. Doubtful. So looks like home expenses are pretty light for you. They're going to be about $200 a month. Okay. But now you have to eat. And so, some eat more than others, but you still have to eat. So maybe you say, well, gosh, I'm going to have groceries most of the time. And so I'm going to spend $250 a month on groceries. That's roughly $60 a week, on groceries. Not a lot really, when you think about it, and especially what groceries cost today. And you are going to dine out every now and then, right? You're going to be invited to you're still pretty close to your college crowd, and you're going to hang out with them on a weekend. You're going to go to a restaurant. You're going to enjoy yourself or whatever, and so you're going to dine out from time to time. And maybe you spend $200 a month doing that. Maybe you spend more, but your point is you spend something. And so let's use 200. Childcare. Don't think that you guys have that to worry about at this point. Mostly, some do, and if you do, put it in there because it's a real number. Laundry and dry cleaning. Now, this is going to be relevant based on your job. So in my job, I'm a banker, and so laundry and dry cleaning is a real expense for me. Okay, it's probably $75 a month or so, but it depends on what your job is. If you don't have a professional job where you need your clothes laundered and pressed and so on, you don't have to worry about this. But maybe you do. And so I'm going to put a small amount in. I'm going to put in $35 a month and assume that you do some yourself and that you take maybe your shirts to the cleaners or something like that. Cell phone. Everyone has a cell phone. There's probably not a person on this call that does not have a cell phone. Everyone has one. And so you're probably under your parents' plan, right? But at some point, your parents probably want to be relieved of that. And you probably want to have that under your own name. Okay. So what's a cell phone cost? $70 a month. Is that fair? $70 a month. Okay. All right. Pet care. All right. Some of you guys have pets. Pets are very popular. And pets will absolutely burn up your budget. Just saying. Okay. If you take care of your pet in the manner that the pet needs to be taken care of. You have to feed them, you have to take them to the veterinarian, you have to put them in a kennel when you're out of town, all these things, right? But pet care can be a really big item, all right? So if you have pets, you know this. I will not put anything in pet care right now. We'll come visit that if we need to. But if you do have a pet, then you do care for them, and you might spend $25 a month on food, maybe 30. You probably spend $200 or $300 a year on vet. If you go out of town and you have to put them in a kennel, that's expensive as can be. So those are things you need to account for. All right. Educational expenses.
David, real quick,
go
before
ahead.
we move on, we had a question related. This probably goes up one back up to the housing side, but a real quick question was related to there may not be many homeowner related expenses, but what about some potential renter things like renter's insurance?
Absolutely.
What would that look like?
So absolutely. So when we get down here a little ways, you're going to see insurance expenses. And we're going to see renter's insurance as a potential item here. It's not very expensive. It might be $20 a month. It's not a very expensive item, $30 a month. It's not very expensive, but it's worth having if you're a renter. And of course, we're going to deal with vehicle insurance, medical insurance, and so on. But that's a great question. And it is included down here in what's called insurance expenses. And the reason I separated those is because I want to spend a moment talking about life and disability insurance as well, because that's an important consideration that sometimes, me included, when I was 22, didn't really think about it a lot, but I fortunately thought about it before I was about 28, and it's really cheap when you have a 2-handle on your age. But when you get a 3-handle on your age, and it's not as cheap. When you get a 4-handle, a 5-handle, you get a 6-handle on your age and you can't afford insurance. So I'm talking life insurance. So it's good to plan that up front. Great question. Did I answer that question adequately, Alex? Perfect. Okay.
Yes.
And you'll have to monitor the chat. I see a few things going through. So if you see something, let me know. Great question. So educational expenses. Some of you may be done with school when you're done with school. All right. But others may not. And so one might have to include some additional educational expenses, tuition, books, room, board, supplies, whatever, that would be necessary to include when you're sort of quasi on your own, but still trying to maybe get your graduate degree or something like that. So I'm not going to put anything in here, but it is a placeholder for you to know that it should be considered because it's real, right? Transportation expenses. Okay, so when you probably have transportation expenses now. You used some transportation today, no doubt. So there's gas and fuel. And so what used to cost you $40 to put gas in your car today, while we're still putting gas in cars, and so that's why I put fuel, because it could be electricity. But today it might cost you $80 or $75. Okay, I put gas in my car today, and the pump stopped at $60. I'm like, that didn't do anything. Now you might used to fill it up, but now it takes about $85 to fill it up. So it won't fill it up. So you're going to have this expense, and I would imagine that you know, when you're just out of school and you're going to see your buddies and your girlfriend and football games and baseball games, you spend a lot of money on gas, and you might spend $150 on gas a month. Okay, depending on how far you drive and what kind of car you have. Now you might trade some of that off. If you work in an inner city, you might be able to say, gosh, I'm going to spend only $75 in gas because I'm going to spend the other $75 on public transportation. Fine. Okay, you're going to spend it somewhere, right? That's the point. You will transport yourself somehow, and it will not be free. Okay, and so public transportation includes Uber, Lyft, okay, whatever those are. I mean, and none of that's cheap. It's very convenient and it's very easy, but none of it's cheap. So choose your poison, right? So maybe you say, gosh, I'm spending $150 on gas, but you know what? I always take Uber to the Braves game. And, you know, I always take Uber to the Falcons. I'm in Georgia, right? To the Falcons game or the United game. And I always take Uber because, you know, I want to just be dropped off there, picked up there, and I won't have to fight the crowd. And so, you know, it's conceivable that you might spend $30 a month on that over the space of a year. That's $360. Okay. Not too far-fetched, I wouldn't think. If you do own a vehicle, you will have to keep it maintained and repaired. And if you have owned a vehicle, you know none of them last forever. And many of them find ways to fail right after your warranty goes out, okay? And so depending on the age of your vehicle, you need to account for repairs and maintenance. And I would probably say something like $50 a month at a minimum, okay? That's $600 a year in maintenance. So that's oil changes, tire rotations, occasional things like filters and other things like that need to be changed out. And that could include some unexpected things as well. All right. But you're going to transport yourself to work, to play, and other places. So transportation expenses need to be considered. And I'll pause there for just a minute, Alex, while we see how people are doing.
Yeah, one other question came in related to, again, probably a step up again, but going back to balances for student loan repayment and what that looks like, and the potential of employer contributions, things like that. But how do they really plan ahead for student loans, especially for recent graduates who may have that 6-month grace period before they need to start paying those back?
Yeah, that's a great question, and I'm gonna address specifically that item at the very tail of this. But it is. Let me go back to like up here in investments and savings. I mentioned that you don't need to only look at, hey, I'm making $40,000 a year. You also need to look at what is my employer contributing to me for being an employee. And if the employer retirement plan, if you were comparing two jobs and each of them were $40,000, and both of them had an employee retirement plan. And you found out that job A, they matched 50% on the dollar. So you put in 2,000, they put in 1. But job B, you put in 2,000, they put in 2,000. Well, job B is a better job, even though they look the same on the surface. All right, so that's the same, that similar mindset goes with student loans. There are some employers out there that say, you work for me for a year and I'll pay half your student loan. I mean, monthly payments. I'll pay every month. You pay your 100, I'll pay. You pay your 100, I'll pay my 100. That sort of thing. There are some public, like municipalities out there that if you work for them long enough, I think it's 10 years. I can't remember. It's some number of years. They'll forgive the student loan. Okay. So there are a lot of things that you should look at in your employer. I don't think you'll find it being forgiven in private industry, but there are some public municipalities that will cause your loan to be forgiven if you stay with them long enough. And we're going to get to it in just a minute, but that's also the same thing with medical, dental, vision insurance. What coverage do you get? It might be two $40,000 jobs, but you're going to have to fork out $300 a month in medical and dental and vision insurance on job A, and you don't have to fork out any on job B. Again, compare the details, right? And that's a great question. Those are terrific questions. Thank you for asking them. Keep them coming. All right, so we're going to live. So let's go back to the top. We're going to pay the government. We're going to pay ourselves. We're going to pay others. We're going to be charitable. We're going to start living, right, through home expenses and daily living expenses. We're going to educate ourselves further if we need to be educated further. We're going to transport ourselves somewhere every day, probably. And we're going to entertain ourselves. And believe me, I've been your age, and you are going to entertain yourself, all right? And so you're going to entertain yourself with vacations that are spur of the moment, like your buddies say, hey, why don't we go to Florida on this weekend, okay? Well, you can do that, but it isn't cheap, okay? Because guess what? You're going to transport yourself down there, and you're going to vacation down there somewhere. And so be sure that those items are in your budget somewhere, right? Now, maybe you say, well, I'm going to pull it out of my emergency fund. Well, if you don't have any money in your emergency fund yet, you don't have any money to pull it out, right? So you have to build up an emergency fund or a vacation fund to be able to pull it out. So again, my original commentary here was you have to have the discipline to do this. None of it's hard. It's discipline, right? And so be the one, you guys be the one that has the discipline to do it. And I promise you, down the road, you'll be thinking, I'm glad I started investing money when I was 22 years old. I'll guarantee it. Entertainment expenses. Now, you guys can educate me on what you'd spend on entertainment, okay? I don't know precisely, but I'd say, I mean, look, I've got a son that I've got 3 sons and 1 daughter. I've got a son that really enjoys golf, and he will entertain himself to death playing golf, that beyond what he can afford. I know it is, okay? And so he has to watch it. He's been down this road. He's doing what you're doing right here. He's just slightly older. He's 25 now, and entertainment is fun, but it's not free, right? Now you can go hike up a mountain, and that's fairly free, although you have to pay for your supplies, and transport yourself there, by the way, okay? But it's not free. So let's say you like concerts and vacations and so on, and maybe you want to put aside $75 a month to do that every year. So that's $900 a year, okay? And maybe you say, man, I want to put aside $100 a month to go on vacations, okay? So that's $1,200. So you want to entertain yourself with things like sporting games, right? So Braves games, Falcons games, University of Georgia games, whatever school you represent, Georgia Southern games, whatever it is, right? And you want a vacation from time to time. And by the way, you like music and books, and so maybe you spend $10 a month on a good book off of your iTunes store, and you're happy with that, and that works. Or maybe you spend more than that. Whatever it is that you entertain yourself with, be sure to put it on this page. Because if you don't put it on this page, pretend like it doesn't exist and pretend like it's a luxury. All right, health expenses. Do you want to be a member of a health club, or are you in an apartment complex that has a health club attached to it, not a health club, but a health facility, a gym, right, with a pool and some other things that you, and a tennis court or something like that, that you might be able to utilize and it be free. But you all know that if you do pay for a health club, it's not a cheap thing, right? You go be a member of CrossFit or, you know, whatever the other, the cycle bars and all those things. I mean, it'll cost you. And so if you decide to go down that path, you know, you could be paying way more than this, but I'm going to use $75 a month. Okay. You really could be paying way more than that. Generally at your age, pretty healthy. So you don't have a lot of physician office visits or medical procedures or prescriptions, but when those things come into play, they do come into play. And so be sure that you are allocating those in your budget properly. And I'm not going to use any here tonight, but if you did, you simply put them in here and they calculate as part of your budget. All right. So personal expenses, you need to look good, right? I know you think you look good, but you need to continue to look good. And you have to buy good looking clothes, and you have to keep your hair trimmed, and you buy gifts for others, right? Christmas gifts, Valentine's gifts, birthday gifts, you know, whatever, right? Things like that. And so on clothing, you need to spend an adequate amount of money to be dressed for the job you have, whatever it is. For me, I'm a banker. I have a look. Okay. For somebody who's in another role, they have a different look. Okay. Whatever your profession is, you chose it. So dress like your profession. And by the way, dress a little above average. You've probably heard this in, I think it's Peter Lane's talk at some point where he talks about how to dress for success and things like that. But dress above average, dress to stand out, dress to look nice, look presentable, make a statement, right? Not over the top, above average. So clothing, maybe you're going to spend $100 a month on clothes. That's probably a little light to get started, but once you get your run rate going, maybe $100 a month, you know, so every couple months you spend $200 and you get yourself, you know, a pair of shoes or some good looking pants or a shirt, something like sports jacket, something like that. You're going to spend money on a barber. You're going to spend $30 a month to get your hair done, hair cut. Okay. And you want to look good. You might spend some money on gifts. We're not going to include anything in there like that, but you would. All right. So you want to look good. You want to be healthy. You want to entertain yourself. You want to transport yourself. You want to educate yourself. You want to live daily. And also you want to have, you want to live in a home. Okay. And before all of that, you want to be charitable and you want to think long-term with investments and savings, long-term and short-term. And of course, before that, you pay the government what you pay the government. Okay, so I'm going to scroll down to the bottom of the page, toward the bottom of the page. And we're going to talk about insurance, which is our next item here, right? So last item. So insurance is important. And for the person who asked the question earlier, what should one spend on you know, a home in the case of renter's insurance? Well, like I said, it's $20, $30 a month, I think. You know, I hadn't paid renter's insurance in a while, but I think it's pretty cheap like that. So let's go with $30 a month. Okay. It's $360 a year. Not terribly expensive. It could be less than that. You know, if you find it's less than that, say you find it's $25 a month, $300 a year. Okay. And you probably don't pay it by month. You pay it probably every 6 months or something. So it's $150, but it every time, but it still equates to $300 a year. Now you do have vehicle insurance, which is just expensive for boys, men under the age of what, 26 or something like that. I mean, it's outrageous. All right. So you're going to spend $100 a month on vehicle insurance. Now, if you get a really expensive car, you're going to spend more than that, but you're going to spend $100 a month on vehicle insurance for sure. Just being a male and being under the age of 26, I think, is where the break point happens. I know I was so thankful to be spending less than that on car insurance when I reached the age of 26. All right, so we talked about when you go to work for a company. Go back to the top of the page. You go to work for a company and they're going to pay you $40,000 a year. Can't do anything about the taxes. They are what they are. by the way, just so you know, you pay this amount of taxes. Your company that you work for pays this amount, Social Security, again for you. This is only half of the Social Security and the Medicare tax. They pay this twice for you. Okay, so you're going to invest money, and make charitable contributions, but you want to understand what the employer's paying for toward your retirement plan. So what are you getting paid? What's the employer paying toward your retirement plan? And then at the bottom of this page, what is your employer paying toward your medical insurance, your dental insurance, your vision insurance, and in some cases, your life and disability insurance, okay? So if you are a single person and you're working for a company, you might find that they pay all of this, and that if you ever added a spouse or a dependent child or something like that, that you'd be responsible for paying that portion, right? So some companies pay all of their employees' expense, and then the expenses associated with other members of the employee's family are borne by the employee. Some companies don't even do that. They say, well, they pay a portion of it, but they don't pay all of it. But I can tell you that you need to look at this number when you're evaluating how much that $40,000 job is. Okay, so I told you to look at what they contribute to your employer retirement plan, but you also got to look at what they pay for your insurance. And to the question earlier, do they give you any kind of contribution toward paying your student loan? All right, some will, some don't even do it at all, and some municipalities will actually, cause by you working for them, you'll get it forgiven. All right, so medical insurance, dental insurance, and vision. I don't know exactly what your employer might charge you, but let's go with $50 a month in medical and $10 a month in dental and $5 a month in vision. Okay, that might be your cost. It could be that it's zero. It could be a little more or less than that, but as a single individual, that's a good ballpark. All right, so you'd be paying all in, you'd be paying $780 a year for medical, dental, and vision insurance. Now, this is not a life insurance seminar either, just like it's not a tax seminar, but I encourage you to explore, and maybe some of you guys are risk management majors and you understand life and disability insurance, so you definitely know that if you have a two handle in your age, you're 20 something, it's a lot cheaper to get life and disability insurance, and you could get some really good coverage for not much money a month. Again, I'm not going to put anything there, but I just want you to know that you can get great coverage, and it's hard to make yourself do it because you can't find another $60, but that $60 will become $160 when you're 35 years old. Okay, and so just know that it's a lot less expensive to get. I'm not talking about term life insurance. I'm talking about whole life insurance, long money life insurance that you should explore. We can get into that later. That's not what tonight's about. But all right, so you make $40,000, which is $33 a month. Everyone has seen the expenses, right? And those expenses total $2,592 a month. So you now have $741 a month available for rent. Well, can you get rent done with $741? Let's just suppose that you are going to room with your buddy from college who graduated with you from university, and you guys are going to have a $1,300 a month rent payment, and you're going to split it. Okay, so you're going to pay $650 in rent. Okay, that leaves you $91 left over at the end of the month to do something else with. And you can see when we started this page that up at the top of the page, $40,000 felt like, man, that's good, and it is because the college graduates. This goes back a couple of years, but Rusty Williams was telling me the average college graduate, he's in the recruiting business, was like 38,000 and some change, give or take. All right, and so it feels like you're in pretty good shape, and you are. So there's no doubt about it. but you have to be disciplined about what's on this page because you're going to pay income taxes. You're going to set some money aside for investments. You're going to set some money aside for charitable donations. You're going to have a house to live in. You're going to live daily. You're going to educate yourself if needed. You're going to transport yourself. You're going to entertain yourself. You're going to have some health expenses. You're going to have some personal expenses, and you're going to have some insurance expenses. None of which is extraordinary. Now, you seeing this might make you think, well, gosh, I've got to do something about one of these expenses up the page. So maybe I can't. Maybe I thought that I could eat out with $200 a month, but I need to trim that down to $125 a month, because you know what I'm thinking down here at the bottom of the page is that I don't have a car payment built into this. And maybe I'm still driving the car that my parents gave me before I went to school, but what if I want to buy a car? Well, I've got a little helpful tool over here on the side. And let's suppose you do want to buy a car and you're able to take the car that your parents gave you that, you know, they say it's your car, right? And by now it's worth $5,000. And so you're gonna buy a car that's $30,000. And that's not too far-fetched either, right? Because it doesn't take long to spend $30,000 on a car. And so you're going to buy a $30,000 car and you're going to trade your $5,000 car in, and you're going to finance $25,000. Okay, let me slide this over here. You can see it. You're going to finance $25,000. And you're going to get an interest rate of, I don't know, 4%. And you're going to have it's a new car, so they're going to go really long with you. And they're going to finance it for 75 months, which is really long. Okay. But you need that because your payment is $378 on that scenario. $25,000, 4%, 75 months, $378. Okay. If you take that and you lay it in here because you want that new car, you got a new job, you have some new clothes, you got a new apartment, you're feeling good about yourself and you want a new car, $378 a month blows your budget. Okay. And so you're renting with your buddy from college, $650 a month, right? Fortunately, you have a buddy to rent with, right? Because otherwise it may not be $1,300 because that's probably a 2-bedroom, but it might be $900, okay, for a 1-bedroom. Vehicle payment, you got that. And so now you're over budget, $212. What do? Well, you scroll back up to the top of the page and you try to trim back some of these things that maybe you don't need to be a member of that health club. Maybe you can work out at the gym and swim in the pool at the gym and so on. I mean, in the apartment complex. So let's eliminate that. Maybe you don't need $1,200 a year for vacations and $900 for entertainment. Maybe you could make that $50, and maybe you could make that $75. You see where I'm going here? This is you're using this tool to craft a number at the bottom of the page that begins to work for you. You're only $87 off right now, right? So let's go back. So you're $87 off. Let's scroll back up here and look. See what we can find. Maybe you say, look, I'm only in for $100 a month in dining out. Okay. Not much you can do about cable and utilities, right? Except don't open your windows and when the air conditioner's on. But maybe you say, gosh, I'd love to save this money for my emergency fund, but I just can't put in $200. I can put in $125. Okay, it's $1,500 a year. You're starting to build it up, right? So let's see what we look like. Now you're $13 to the good. The point of all of this, gentlemen, is do the math, okay? You made $40,000 and you probably had some ideas before we started this webinar about what you could spend your money on. But now you know, because there's some things that are non-negotiable, like the income taxes. I would say this is non-negotiable too, the employer retirement savings plan. If you don't do that and you're 20-something, shame on you, because you won't have the wealth you want when you're 50-something or 60-something, okay? Savings, of course, you want savings for emergencies and other things like that I mentioned earlier, but invest long money here. Don't lose that. Don't fail to pay yourself after you've paid the government. And then the rest of it, are things that you have some, for the most part, some decent amount of control over, right? If you don't like the fact that your employer is charging you for your insurance, right? Maybe what you need to do is look for an employer pay package that pays for your insurance and gives you all the other benefits too, and the job you'd be equally happy with, and the job you can progress with. So don't step over the 20s to pick up the 5s. Okay. Don't not take a job if there's a good long-term career opportunity just because you have to pay insurance. Okay. Be sure to be smart about it. But what I'm saying to you, gentlemen, is be smart about filling out this page, this document, which will circulate to you and you can use. There's a mortgage payment calculator on the second tab, and we won't get into mortgage payments because I made the assumption tonight that you guys were going to be renters, but you can use it for that as well, and it would simply lay in that mortgage payment right here instead of a rent payment. Same math, it just calculates it as a mortgage payment for something you're owning, okay? And then don't forget to go back up the page and put in what it's going to cost you for lawn care and other things about your house. But in our budget, we managed to make it. We have $13 surplus, Alex, and that's $161 a year, but it works. Point is, the budget works. And I'll give you one more thing to know before we jump off the line. There's two ratios down here that banks look at that you need to know about. The debt to income ratio is this one right here, and the housing to income ratio is this one right here. Debt to income ratio is simply the sum of your debts, $1,028 a month, divided by your income, gross income of $3,333 a month, which is 30. So you have a 30.8% debt to income ratio. The banks don't like that, generally don't like it to be more than 40%. So you're in good shape there. And a housing to income ratio, which is your housing cost, in your case, your rent payment divided by your gross income. And banks don't like that to be more than about 27, 28% max. Okay. So in this case, we made it work, guys, and you have a good budget to live by if you make $40,000 a year. If you make more than that, you just plug in that number. If you make less than that, you plug in that number and you live accordingly. So thank you, Alex, and I will take some questions and we'll wrap it up.
Great. A quick reminder for folks, you can either raise your hand or unmute yourself and ask questions directly. You can also drop them in the chat feature. One quick one that came in was this tool is a fantastic way for folks to see in real time how do they balance it. And David, you offered some great advice about following the numbers and applying things. What advice would you have for someone who is starting to maybe get a handle on their finances the first time and utilizing this budget while they're still an undergraduate or collegiate member right now? What advice do you have for the immediate application of a budget?
Yeah, so let's suppose you have not graduated, all right, and you are working at maybe you're working in food services at the school. You still have money, so you still have this, and you still have taxes. They're taking out some kind of taxes on you. Right? You're obviously a part-time employee, and so there's not going to be an employer retirement plan. But you can do this budget for any human who works or has income and expenses. Maybe that's a better way to say it. Has income and expenses. So you could do that today and start getting in a rhythm of understanding all of these expenses and start watching it. So a budget is made to be so if you think of a budget's made to be a fence. So it just, you sort of envision two fences alongside of a road that you're traveling, and it keeps you from just getting way off. You're just bouncing back. It's not meant to be precision in the sense that you lose your mind if you spend more than $125 a month on utilities. Okay, it's a guide for you to know, hey, this is generally what I spend on utilities. Sometimes it's 112, sometimes it's 132. But I'm not too far off by saying I spend $125 in utilities. So I think it's a good practice as an undergraduate, frankly. Honestly, I wish I'd have done it as an undergraduate. I had some rudimentary way of doing it as an undergraduate that probably wasn't very smart. But, that's the benefit of listening to someone like me is I've done things that aren't too smart and as far as financial goes. And so you learn, and you learn this is a really good way because the numbers are your friends. I always like to say the facts are your friends and the numbers are your friends because they do not lie to you. And so your discipline matters, and to do it as an undergrad, right on. I applaud you.
Great. I've got two other questions that have come in. The first is, what is a good amount or percentage to have as a surplus at the bottom of the budget? So at the end of the day, what would you recommend as a number that somebody should be shooting for that bottom number?
Good question. It depends. Okay. If I have fully funded my savings for the year, right, and I feel like I have sort of overdone it in other things, and maybe I say, here are all my daily living expenses, but I want to pad it with another $200 a month that I think I might spend. If you've got a really tight budget, then you need some surplus down at the bottom. If you don't have a very tight budget, then in other words, you've got enough padding in it, like $200 here and another $100 here, and it still works for you, then you've got plenty of moving around space. But what you want as a user of a budget is financial flexibility. So it really is up to you. But to answer your question, this number down here at the bottom of the page, personally, I would say that on a monthly basis, I wouldn't want that to be more than less than about 5% of your gross up here. So 5% of this number is $150. It'd be really nice if this number were closer to $150.
Great.
But again, it depends on how much you've padded your budget up here. I mean, if you've got loads of extra financial cushion up here, not so important. But if you're really thin and running along the edge of the fence up top, you need to have more down here at the bottom.
Wonderful. And then the last question we have right now, again, folks, if you have any others, feel free to drop them in the chat. But the other question that we have, you mentioned a moment ago of this budget being able to serve as sort of a guidepost and keep you within your means. For somebody who is new to utilizing a budget, chances are they also are not used to keeping track of their expenses as they go throughout the month. And so do you have any tips or advice on the best ways to track actual spending related to their monthly budget?
Yeah, so hopefully you have a deposit account somewhere, right? And it's with a debit card probably associated with it. And whether it's at a bank or it's not at a bank, it still gives you a statement of what you spent for the month. And a lot of times, you can put categories on that if you go online and things of that nature in some banks. But it's really incumbent upon you. I mean, this is an Excel spreadsheet. Honestly, you could come over here and create. I mean, I'm going to give you the sheet. You could come over here and create a whole nother column, and simply this is the budget. You could lay in some extra columns over here, and show actual just for fun, right? And so you could literally come to the top of this and oops, sorry. If I could do it, I would. Anyway, what I'm trying to do, there we go. Okay. Is lay in an actual over here. Sorry. It will work if I could make it happen. Review. There we go. Okay. So I'm going to copy that over there and lay in your actual and just compare. I mean, most everybody on this line is pretty familiar with an Excel document. This is a baseline Excel document. And of course we would hide all these other things here, but nonetheless, you would be able to see what your actual is right there in front of you. And know, okay, I budgeted to spend utilities up here, and you could put month 1, month 2, month 3, month 4, month 5, all the way through 12 and track it that way. You can also use a checkbook register if you even know what that is. But there are ways with every financial institution to see how you're spending your money.
Great. Thank you so
Good
much.
question. Really good question. Yeah.
Well, that appears to be all the questions we have right now. I want to thank you all for joining us for tonight's program. We greatly appreciate your participation. A friendly reminder of some of the great events that are coming up as the end of the semester winds down and we start to look to the new year ahead. We'll continue our educational opportunities, including A's Academy. You'll be seeing information about regional leadership conferences. We encourage you all to find your RLC upcoming and register and make a point to attend. And again, a huge thank you to Brother David Edwards for taking the time tonight and sharing this fantastic budget with all of us and providing some fantastic insights on the strong financial foundations. Any final thoughts from you, sir, before we close up for the night?
I don't have any. Thank you, Alex. I appreciate the opportunity to host it, and thank you for recording it so others can see this and you can use it to benefit other brothers out there.
Wonderful. Well, thank you all again for joining, and we hope you have a fantastic rest of your evening.
Thank you.